to make a profit.
Okay,
So to know how I'm going, how am I going to enter? What is the direction of the market? What should I be? What are the indicators that I should be looking at, so that I'm able to know that if I enter this market, am I aiming for a buy or a sell, and how do I make the profit? You know. So how do I read like the direction of the market? Yeah, I know I know the basics, probably how to see that maybe this is an upward trend, a downward trend, but how do I exactly know where, like, also to make an entry, a right entry whereby I may not, you know, lose on the trade?
Okay, so that's a good question. When you are trading, usually it's good to trade following that trend. And if you follow the trend, there's a likelihood of you making a good profit in the market. That's why most of the time I say, I usually trade with the trend. That's why most of the time I usually say close some trades and then break even, because I'm following the trend. When you break even, now you can just continue moving with the market. So first thing you're supposed to do when you open your chart, let's say 1 hour time frame. That's why I usually have this moving average on my chart. So the first thing you do when you open your chart, you start from 4 hours, 1 hour, or day. You just open it just like this. Then it will give you an overview where the market is moving. So when you look at this point right here, you can see that we have a break of structure. We have this high it has been broken. This high, it has been broken. So this one is a clear indication that we are having an uptrend. So in your mind, you know that we are having an uptrend. So then you go to 1 hour time frame, you can see it clearly. Okay, 4 hour time frame, let me mark this. You can take this on this point right here. Then you go to 1 hour time frame, you can see clearly that it's an uptrend. So you can see the market's moving up. This is an uptrend. So your aim is to trade following that trend. And you know that this EMA 50, usually sometimes it acts as support or resistance. So that's why when I trade, I usually trade using divergence. I combine it with EMA 50, then with a stochastic oscillator, then I use divergence. Combining it with SNRC2 or SNRC1. Those are continuation setups. So for instance, this one, when you open it, this is a 1 hour time frame, you see clearly this is an uptrend. So obviously, when we have a break of structure, this is a break of structure, the market is going to retrace back. We have a breakout, we have a retest, then it will continue moving up. So break of structure, we have a retest, it will continue moving up. So here we have a break of structure. I'm expecting a retest, then it will continue going up. You see, that's when you are trading using, but you cannot enter buy right here. Even if you know that it's this an uptrend, you cannot enter buy at this point. You have to wait for the market. That's why I have to add stochastic oscillator. So when you're having your stochastic oscillator on the chart, it will be clear for you. So you see 1 hour time frame, you see the stochastic oscillator, it's up here. So this is an overbought. You cannot end up buy here. You are supposed to end up buy down here. So I have to wait for this one to just retrace back. To go up, then it has to retrace back. So the moment it retraces, the moment it will. So I have to wait for it to retrace back. By the time it will retrace back, this one right here will be down here. And you will see at this point right here, it could have formed what we call divergence. You see this one right here. By the time this one will be down here, this one will be around here or around at this line, at this trend line. So, and it could have formed divergence. That's why you enter a pie. So you enter a pie when we have an oversold here and we have a clear divergence. And when you know where the trend, where the market trend is moving, the direction. That's how that's the easiest way you look at the market. So the first things first, you have to understand the direction of the market. you cannot just enter because I'm like, you know that the market is moving, it's an uptrend. You just enter at this point, like, let me buy at this point. No, you cannot buy at this point. So if you want to buy, it's an uptrend like this, okay, like this setup right here. So if tomorrow I'm going to buy, if I'm going to enter the trade, once this candle closes above this one, we have a break of structure. Once we have a break of structure, what I'll do, I'll mark this order block right here, this demand zone. This way I'm going to wait for the market to come to. So the moment the market comes up to this point, this stochastic oscillator will be on oversold. And that's where I'll wait for a confirmation, maybe candle engulfing, for me to enter my buy. And the moment when I usually say that enter 30 pips below the zone, this is what you do. On this zone right here, this is where you put your stop loss, 30 pips. So you use 30 pips, you count 30 pips below here, you just put your stop loss right. So you enter this way, and if you have an account you are having, let's say you have a $50 account, how do you trade? So don't just open all trades at this point. Sometimes the market can come up to this point and it will continue going down. It will swipe this one right here, then before it continues going up. So wherever it comes up to this point, start layering. This way you open your first lot. Then when it moves in, you open the second one, the third one. That's it. But don't open all trades up here. It will just blow your account before it comes up. It comes up this point. So it's good for you to layer within this zone and put your stop loss 30 pips below this zone. So usually it's 30 pips. So usually I use 30 pips below this zone. So I just use 30 pips below this zone. And that's how you enter your trade. First thing, determine the trend direction. So the moment you determine the trend direction, it will be easier for you to know the entries. So trend direction, you use 4 hour. If you are an, even like for me, I'm an intraday. I usually use 1 hour and 4 hour time frame. So that's how I use it, and I get my trend direction. So I think I've answered your question. So that's the easiest way to trade. You usually don't complicate anything. Are you using VWAP for the market analysis? No. Do you prefer using stochastic over RSI? Sometimes I use both of them. So it depends. There is sometimes I use RSI, sometimes I use stochastic, but I prefer using stochastic oscillator for me. But RSI is good too. Both of them they do the same thing. Another question, I found a bunch of files in your Telegram. I'll explain that one later. So that's how you do the analysis. So first thing you're supposed to do, go to 1 hour for higher time frame, see the direction of the market, go to 1 hour time frame, wait for divergence. So the moment you get your divergence, that's when it's like at this point right here. You see the market, if you see clearly, the market broke this structure right here. So the moment it broke this structure, now I'm going to look for divergence. So I'll just put my line right here, and then this one right here. This way I'll enter my buy. I'll not just enter my buy at this point. At this point right here, the market does not form divergence yet. So I have to wait for it to be oversold. So for me to get a clear divergence. So then at this point, this way I'll enter my buy, and I'll put my stop loss 30 pips below. So the moment I enter my buy, some people ask, where do you have to take your profit? So usually when we trade, this way you take your profit. Your profit is previous high if it's an uptrend. This way you take your first profit. Once you take your first profit right here, then you break even. So you just break even, you leave your market run. Just the first take profit is at this point, then you break even. So if it's a downtrend, so let's see, if it's a downtrend, usually keep it simple. So the moment you keep it, but if you complicate yourself, it will be hard. So let's say a downtrend, something like, okay, let me see. Okay, let me see something like this. This is not clear though. Let me have a clear downtrend. So let's say at this point right here, you see this, we have a, it's not that, not move for a long time, but it's a downtrend that is, you can see the moving average EMA 50 is above it's above the price. So what you're supposed to do first, you can see here, we have a break of structure, right? So we have a break of structure. So the moment you have a break of structure, what you are going to wait is for the retest. So you can just do like this. Break of structure, you wait for the retest. So retest, it's at this point right here. That's the first retest. And then we have another retest, which is at this point right here, but this one is not that strong. We usually use SNRC2. So SNRC2, this one right here, if you go to a lower time frame, you can get a SNRC2 or SNRC1. At this point, you will get a supply at this point. You must have a supply, and then we have a strong support. So like this one, strong support, then we have supply here, then entry. We call it SNRC1. So if you get a setup like that, then you look for divergence. So if divergence is not at this time frame, you go one time frame lower. So you don't go all the way to 15 or 5 minutes. You just go one time frame lower, maybe maximum 15, but one time frame lower to find if you have a clear divergence there. So if there's no divergence, you can't enter that trade. So like this one here, let's try to mark this point. Then I'll go 30-minute time frame. Let me see what I have. So at 30-minute time frame, you can see here we have at this point, the zone we have at this point. Then this one, we have this point. So you can see at this point, this one is on the same level. So this, it's a high risk trade because both of them are on the same level, but this one is higher than this one. So it's just moving this way. So what you will do here, you'll take a sell, but it's a high risk. There's no clear divergence. There's no clear divergence, but you can take the trade because it's on the same level. And this one is higher than this one. So that's why you can take a trade, but it's a high risk. So you cannot open a full margin, something like a full margin at this point, but it's a good trade though. But it's a high risk. So first thing, you're supposed to identify the breakout of structure. Then you wait for the retest. Once you have the retest, you look for divergence. The moment you have divergence, that's it. You enter your trade and you put a stop loss 30 pips below. So that's how you trade. So another thing, so I think I've answered the question you asked me. Another, what of currency metal strength? What of currency metal strength? What do you mean by that? Maybe you explain it. So that's how you trade using divergence. So today I want to show you the easiest way to trade using EMA 50, combining all these that we have. So combining all this that we have been discussing. So I'll take this one off. So first thing you are supposed to do, we are going to use EMA 50 and candle engulfing. So I told you candle engulfing is when the market engulfs the whole body of like this one right here. You see, this one is candle engulfing. And then when you look at this one is candle engulfing. So we are going to look at candle engulfings only to trade, and we combine it with EMA 50. So the conditions are in candle engulfing, when you go to a lower time frame, EMA 50 it must have what we call breakout of structure, or we have a trend line breakout. So EMA 50 we use it we use it for breakout. If we have a breakout, we are going to end that trade, and stop loss we are going to use to put it on the lower, on the upper higher or the lower lower. So that's why we are going to put our stop loss. So for instance, like this one right here, we have candle engulfing. So I want you to understand just candle engulfing. I think I sent a PDF on the channel for candle on candle engulfing. So this one candle engulfing. So this 1 hour time frame. So if I go to 5-minute time frame, I'll show you what I mean. So if I go to 5-minute time frame, it's right here. So 5-minute time frame. So I'm having what we call a breakout. So you can see the trend line. It has been, the market has broken the trend line. So the market, the trend is above the price. So what you are going to do, you enter sell, and then the stop loss, you are going to put it on top right here. That's where you put your stop loss. Again, how do you exit the market? So you are going to exit the market using a trend line. So you just draw your trend line. So wherever the market breaks through this trend line, you just exit the market. So that's the easiest way to trade again. Again, I told you the other method of trading is trend continuation. This one is market reversal. So if you want to trade on reversal, that's what you do. So let's go to H4, candle engulfing, any candle engulfing. So let's take any candle engulfing, you see what I. So we can take even this one. This is candle engulfing. Then we go 15-minute time frame. So 15-minute time frame, here we have it. So that we have EMA 50 breakout. So you can see we have the breakout at this point. This is the breakout. So the moment we have this breakout, you just enter your buy at this point. Then the stop loss, you are going to put it down here. That's why you put your stop loss. And then the market will move. This is where you exit. You just draw your trend line. I want to draw your trend line. So the moment it breaks the trend line, that's where you exit. Or you can use EMA 50, but combine it with the trend line. Whenever it breaks the trend line, that's where you are going to exit. So that's how you use candle engulfing and EMA 50. But you have to be careful when you are trading using. So you have to be careful. So let's use another candle engulfing. So any candle engulfing, you can use any. So it's like not like I'm selecting the one I know that they will work. You can use even this one. This is candle engulfing. So you go to 15-minute time frame. Yeah, it's right here. So 15-minute time frame, we have that one. That's candle engulfing. So you see we have breakout. That's a breakout. This is where you enter your sell. Stop loss is up here. Put your stop loss up there. Then this is where you'll take your take profit. So you just draw your trend line. Whatever it breaks the market, whatever it breaks this trend line, this is where your take profit is. You just take your profit, then you leave the market. As simple as that. You don't need to complicate it. So, but first you must have what we call candle engulfing. So candle engulfing is important. And there must be a breakout. So if there is no breakout, that one is not clear. Remember, this one is for reversals on reverse of the market. So let's see another. We can take any. Maybe we can just take even this one. So somebody can say, what about this one right here? So let's try to take this one right here. This is candle engulfing. Then we go to 15-minute time frame. Just try to cut it. So you can see this is the one we marked. Then you draw your trend line. So you see EMA 50 breakout. And here we have a clear breakout. You enter your sell. Then we have a stop loss up here. Then you draw your trend line again for you to get a clear. Okay, you can use even these two if you want to use them, but we use these ones. So you can get a clear exit. So that's how you trade. So this is the easiest way to trade in the market. So first we must know how to use candle engulfing, and we must know on how to use EMA 50. You see, we have a clear breakout. Then you enter your trade. You wait until it breaks through EMA 50, or you use a trend line. So that's how you trade. Maybe if you have a question regarding this trading criteria, you can just write on this on the chat. I say you had CMS, which had a buy, double buy, etc. Where we access the recording. Oh yeah, I'll explain about CMS on how to use it. But that one you must understand on how to trade. But it's easier still to use it. So another question now, if you have a question regarding the engulfing and EMA 50. So this one is engulfing. So let's see what's happening. We have a breakout. So you must have a breakout first. So here we have a clear breakout. You can see that EMA 50 breakout. So you enter your sell at that point, then you draw your trend line, you wait for breakout, that's where you exit. Guys, you see how easy trading is. You don't need to complicate it. So you wait for breakout, you just exit. That's when you are using just to you are using only one indicator, EMA 50, and this EMA 50 EMA means exponential moving average. I just doing, and I'm doing everyone should let that one. So what am I okay. So first for EMA 50 and engulfing, maybe you can ask a question you are not understood. I mean, you see how easy it is on how to trade using this. You don't need to complicate. If you want to trade on reversals, like okay, on Monday, let me show you something. This is a gold, right? Okay, on gold, this this is 1 hour time frame. Let me go to 15-minute time frame, maybe. 15-minute time frame, we are trying to form candle engulfing. So I'll wait for candle engulfing, 15-minute time frame. So once I have candle engulfing, I'll go to 1-minute time frame. I'll wait for my breakout, which here I have already I have a breakout. So the breakout is right there. Then I will draw my trend line. You can see the trend line. It's right there. So once I do like that, now I'll wait for a new high to be formed right here, higher, lower. Then I'll draw my trend and I wait for the breakout. Or I will use EMA 50. I'll wait until EMA 50 is okay to the upside. That's when I'll exit. So as easy as that. That's why on Monday I'm expecting maybe gold. It's not a must again. It can fail. I'm expecting gold to drop. So when it's going to drop, it's going to drop up to this point right here. So the moment it comes to this point, it's going to shoot up. So that's how we are going to use candle engulfing and divergence and EMA 50 to trade. So first, you need to understand the direction of the market. That's the main point, direction of the market. And if you want to trade on reversals, you have to understand candle engulfing. How are you going to use candle engulfing? And you are not going to combine just daily. There's a combination, time frame combination. So you cannot use H4 with M5. No, you'll get false signals. So you have to if it's daily, you may be with H1. So you must have, okay, let me take an example of candle engulfing on daily. Okay, you can see like this point right here. This is candle engulfing. This is daily. So I'll go to H1. Let's see what we are having. We just will enter our trade on a breakout only. Yeah, right there we go. This is what we marked. Then we'll draw our. You can see EMA 50 that's already been broken. So if you want to confirm, you can use that trend line. So we have our trend line. So we have the breakout of the trend line. Entry your sell here. It's within the candle engulfing zone. So you have your sell here. You just wait, or you wait for the retest. You can enter your sell line here, and then the market drops. You see what happened. So that's how easy it is. You just don't need to complicate it at all. So breakout, but you must have candle engulfing. So candle engulfing is important. So if it's daily, if it's H4, and if you started from, let me show you something. If you started from daily time frame, let me say it's at this point I have this candle engulfing. So I go to H1. Okay, right here. So you can see the market, and then it came back. So yeah, trend line breakout. So at that point, I can enter my buy at this point. So if I want to open another trade, I'll just wait until I'll go maybe H4 and look for another candle engulfing. So I have this candle engulfing right here. So then I'll go to M15. So when you go to M15, this is what we have. Okay, name 15, this is what we are having right here. So again, you can add your trade at this point, because here trend line breakout. We have that one, you enter your buy at this point. Then your stop loss is right here. Remember, you opened your first layer of trades right here. So this one, you can close some of them, or you can move all the stop loss of these trades to this point right here where you open more trades. So once you open more trades, you put your stop loss at this point. Then again, you continue moving with the market. So you go to 1 hour time frame, you look for candle engulfing again. So like this one right here, we have candle engulfing. You go to 5-minute time frame, you do the same thing. So when you go to 5-minute time frame, it's right here. Again, we have breakout. So we have the breakout. You put your stop, you move all your stop loss to this point, then you enter your more trades, and then you put your stop loss here. Then the market will continue moving up. So that's how you trade. You continue trading with the trend using candle engulfing, and that's how easy it is. Guys, I think this one is too easy. Maybe, do you have any question on candle engulfing? And Monday, we are going to use the same. On Wednesday, I mean, on Wednesday, we are going to use the same trading, because we are going to do it together. So do you have any question related to candle engulfing? You can just write it on the chat. Guys, you have any question? Points for EMA. What do you mean by points for EMA? Settings. So settings for EMA, it's just you go to moving average, then you have a period is 50, shift is 0, then it's supposed to be exponential, apply to close, then you can choose color of your own. Yeah, that's it. So the period is 50, shift is 0, and method is exponential, apply to close. Yeah, any question again? I have a question. Is when do I sell and buy? I'm green on everything. So I was explaining, that's what I was explaining. We have candle engulfing. I don't know if you know something about candle engulfing. So when you are using candle engulfing, it enables you, and this one you don't need even to put a stop loss. Actually, This one, you don't need even to put a stop loss 30 pips. You just put a tight stop loss. Like if we have a candle engulfing at this point, like this one right here. This is candle engulfing. Where do I put my stop loss? You don't need to go 30 pips. You just put your stop loss right here. Just 5 pips or 10 pips below. That's it. You don't need to go far. And once you have your confirmation, like once you have your confirmation, like we have a breakout, like this one right here, and this one is not clear. So this one, okay, this one is not clear. So I'm not going to take, if I was using candle engulfing only, I'm not going to take this one. I'm not going to take this one. Because actually I'm not going to take this one because I don't have a clear breakout. If I'm going just to concentrate on candle engulfing only. But if I'm going to combine it with stochastic, let's use stochastic, let's add stochastic oscillator here. So if I'm going to combine it with stochastic oscillator, it's going to give me something different. So it's going to give me a confirmation right here and this one right here. So still, if I'm going to use a stochastic, you can see we have a divergence. So we have low high and then we have lower low. So these are clear divergence. These are hidden divergence. So I can take a pi here. But if I'm using only candle engulfing and breakout, so this one is, I will not take this one because it's not clear. It's not clear for me. But if I want to, if I need further confluence, so I just use divergence. So because, and once I get divergence, once I find the hidden divergence, then it's clear for me to enter the trade. So candle engulfing, so it does not mean that when you have candle engulfing, it's going to work. Sometimes candle engulfing fails. That's why you need a breakout, this EMA 50 for it to give you a clear breakout. So if you don't see it, just don't enter the trade. Just wait for an opportunity like this one now, the one I've marked. Let's see. Let's go. Let's see. Okay, like this one right here. We had candle engulfing, and this one we are going to have this a clear breakout. So you can see we have a breakout. So then you can enter your sell. You can just enter your sell. You can enter your sell. Your stop loss is supposed to be at this point right here. Just put your stop loss right there. Then you enter your sell. You wait for the breakout, the opposite direction right here. You take your profit. I found a bunch of files in your Telegram channel. You advise the ones you if you want to if you are starting trading right now, we have a file on SNR, support and resistance. You can use that and candlestick. You can use those two PDFs. You can learn a lot from them. There's the SNR and PDF and candlestick PDFs which are there. So you can use those ones. They can help you to start. So that's one of the easiest way to trade. I've shown you the easiest way to start trading. The question you ask that first, how do I enter the trade? Or how do I know that this one now I can enter this trade? So I think I've explained it, I've answered it. On Monday, maybe when you try to do it on demo, once you find your candle engulfing and try to see if you have a breakout, it will be easier for you. Another question? Okay, guys, if you don't have a question, so let's continue. Let me show you now on how this candle engulfing will give you now the zones. If you are not using a EMA 50, how do you get the clear zones now where you exit your market? It will be easier for you. I mean, it will show you where you will exit your market. or why you will counter your market. Break of structure and change of character. For the teachers on how to use break of structure and change of character. Okay, I can show you that one, but let me finish this one right now. So when you have a candle engulfing, so you are like, how far can I go if I don't want to use EMA? So you can combine. It's all you need is just what we call confluence. So you can combine when you have candle engulfing, you can combine it with a bunch of confluences actually. So you can use candle engulfing with uh, Fibonacci retracement. So you can use it Fibonacci retracement for it to give you the zones where you are going to take your profit and where you are going to exceed the market. So we use Fibonacci retracement, for instance, but this one, I'm not going to explain using Fibonacci retracement at the moment. That one is for maybe another day, but it can help you too. Right now, let's just focus on divergence and candle engulfing. Let's just focus on those two, divergence and candle engulfing. Try to make everything to be simple, precise, so everybody can be able to understand. And remember, divergence, you don't take any divergence. Remember, I told you that, like, market, just like, because we have a market like this. Okay, we have a market like this, then maybe we have divergence. We have divergence like this one, right? Like, okay, let me try to get a clear divergence anyway. Okay, like this one right here. So we have that one, and we have this one. So this one is not that clear, but you see where the market is at. So at this point, if you get a market just like this, and we don't have SNL to see this one, I think we have a SNLC1. This one is a good setup. If I go to H1 time frame, can be clear. You see, we have a demand zone here. We have resistance, demand zone, then we test here, then it flies. So this one, you call it SNLC1. So this one is a clear setup. But if you get a setup like this, then you go 1 hour, one time frame lower, and then you find that we don't have SNLC1 or SNLC2 setup. Even if we have divergence, that one is invalid. You cannot take that one because sometimes it can work, but it's a high risk trade. You must have the confidence, SNLC2 or SNLC1 of the same zone. So that's how you get a clear entry. And how do you identify those zones, the resistance zones very fast? You can just go to 4-hour candle like this one. You can just take 4-hour candle, then you mark, okay, you mark your zone like that one. How can I know that this one, it's a good zone or it's not a good zone? I will just go to 3-minute time frame to see if it's on an EMA 50. So still, it's not on EMA 50. So this one, I will not take it yet. But some zones, if you go to daily time, 4-hour time frame, like this one right here, this candle right here, yeah, let's say the market was at this point, then you go to 15-minute time frame. You see, you find that EMA 50, it's at that point too. So, and then that zone is a strong resistance. So this daily, then you go to H1. Let's see. You see, on H1, you see the market is already on this zone. So this one is a strong. And if you extend your zone the other side, you can see it's a strong SNRC1 zone. So that's a trick. Which tool do you use for daily trading analysis? Daily trading analysis. I'm not getting your question. So this one, that's how you get this point. I mean, this zone exactly on EMA 50. So it does not necessarily mean that it has to be only for, you can use even GBP USD. So let's say 4-hour time frame. So in 4-hour time frame, you can take any candle, the last candle. Okay, let's take let's say this candle right here. So let's say this was the candle, then we mark it like this. So since we are at for H4, we're just going to M15. So we go to M15. If EMA 50 is on this zone right here, EMA, the market was on this zone, then it was a strong zone. So you go to EMA, you go to M15, then we check EMA 50. So you can see here, EMA 50, it's exactly on the zone. And then when you extend it, you have a strong resistance. So you can see the zone, strong resistance. So at this point, you can enter your pipe, but stop loss, it has to be few pips, around 5 to 10 pips below. Again, you can use it now at that point, but you don't go to any lower time frame. At that point, that's why you are going to look for divergence. So that one, you are using only the last candle trade. So you use that one, and then you see at this point, but we don't have a clear divergence. So this one, you cannot take that trade. So that's another way you can keep, instead of you just opening all the charts or going all the way back, you can just look for the last 2 candles or the last 3 candles. Let me use New Zealand dollar USD. So like this one, you go to H4, you can see this one's a momentum. These are momentum candles. You can see they are increasing in size and they are moving up. So you can just take the last. You can take, okay, like this one, this candle right here. This one's a bullish candle. So this one, you can mark this one right here, and then draw your horizontal line. Assume this candle is not there. It just started forming this candle. So mark it like this. Then since we are H4, you go to M50. You see if EMA 50, it's at that point. So you see EMA 50, it's at that point. So you can easily take that trade. Then, but the stop loss, it has to be few pips below. So that's how you trade using one candle and EMA 50. So yeah, do you have any question? On tomorrow, these are some of the tricks we are going to do. So tomorrow, whenever if I send the signal, like I'll just identify, I'll leave EMA 50. So I'll just mark the zone. If I mark the zone, then I'll leave this one, then I'll mark the whole zone where we have a breakout, EMA 20, EMA 50 breakout. So once we have EMA 50, so in other words, when I'm sending the signals, when you are going to look at it, before that, let me show you this one. So like this one on daily time frame, this is only one candle. This is the opening candle, because this one you can see it's at EMA 50. So if I go to daily, I can easily see that this the opening of one candle. You can see that. You see this? It's the opening of this candle. So if I open this trade, so right here, opening of that candle, and you can see there's no clear divergence though, but you can see it's on the same zone. It's on the same zone with EMA 50. That one's a strong resistance, strong support. So you can just take your trade at that point, but the stop loss is supposed to be few pips. But for me, I usually take trades that are having divergence. This one, I just term it as a high risk. So you can just take that trade at that. So let's continue. So as I was saying, on Monday, on tomorrow, when I send a signal, I'll just be saying, we have a EMA 50 breakout, candle engulfing, and EMA 50 breakout. So when I say that, maybe candle engulfing in a 1 hour time frame. So you can go to 1 hour time frame, you can see the candle engulf. And when I say EMA breakout, you can go to 5-minute time frame to see that EMA breakout. So EMA breakout, yeah, this one, though this one is not that clear, but so you have the breakout, then you enter your pipe at that point. The stop loss, so you just put it few pips below this. So that's what that's the criteria. So whenever you hear me saying that EMA breakout, candle engulfing, EMA breakout, that's what I mean. And if you have your EMA 50 on the chart, you can easily know when to exit the market. Does not necessarily mean that I have to tell you what to take the profit. You'll easily know this way I'm going to exit the market, because the breakout in the opposite, the breakout of the EMA 50 in the opposite direction. Yeah, so that's how easy it is. So like this one right here, NSD on H1, I don't have candle engulfing yet, so I cannot enter this trade at all. I'll just wait. I'll just wait and see what's going to happen. I'll wait for candle engulfing. If we get the candle engulfing, then that's when I'm going to enter my trade. So first I'll wait for candle engulfing. And if I enter with candle engulfing, obviously I know where the market's heading. It's heading to EMA 50 because EMA 50 happens as a magnet, a strong support or a strong resistance. So if I'm going to enter that trade here, I'll wait for it to come. So I'll just hold until again EMA the market breaks EMA 50 in the opposite direction. Still show clearly where to enter and exit the market so that we understand. I've told you that when you open in the market first, okay, let me say this is the market we have right now. And we have candle engulfing. Let me say you have candle engulfing. This is candle engulfing. And so we have candle engulfing right here. So I'll go to 15-minute time frame. I'll wait for breakout. So this was the breakout. This is a clear breakout. So I'll wait for the retest. So wait for the market to retest because this is a candle engulfing. You cannot enter in here before. If you enter here, meaning the candle engulfing, the candle has not closed yet. The candle closed when it's at this point where I closed all everything like this. So you have to wait for this market to just retest. It's going to retest at EMA 50 or it will come up to this point. And when you enter your trade, your stop loss, it should be just below. This is where your stop loss is going to be. What if the market is within here, still you are okay. So that's how this is where you enter your trade. We are using candle engulfing. Again, candle engulfing, that's a strategy you can use to trade. That's the easiest strategy you can use to trade. Again, you have to wait for the candle to close. You don't enter before the candle closes. And the time frame you're supposed to use, don't use less than 1 hour time frame to look for candle. Look for 1 hour, 4 hours daily. So that's if you want to get a clear. Like this one now, we have candle engulfing up to that point. This is where we have the engulfing. So how do you enter your trade? So I'll go to 5-minute time frame. You can see at this point right here. So 5-minute time frame. So we have the breakout of the EMA. We have breakout of EMA. So breakout, then we have retest. So here, that's where you enter your sales. So the moment you enter your sales right here, this is where you put your stop loss at that point. You put your stop loss up there, you enter your sell here, you wait. You draw your trend line. You are going to draw your trend line. You wait for the breakout. So like this one, we have a breakout retest, so it might change the direction, but you wait for the breakout. So the moment we have the breakout, that's where you exit the market. Like at this point, we have the breakout, you exit your market. Or you exit, so if you had more than 2 trades, you can close some, then leave the rest to run. So that's how easy it is. Again, told you don't need to complicate it, you just need to make it simple. Try to understand it that. So another question? Yeah, so guys, let's try to look at gold because tomorrow, wow, now looks simple. So let's try to look at gold and see what's happening. So on gold, remember when from last week, gold has been moving in a bullish movement, right? That's been having a bullish movement. So on H4, remember when the market dropped all the way then? Yeah. So remember when we gave out a signal at this point right here, then this signal failed, because you can see clearly here we had that divergence. So this where we were, and then this one. So the signal failed. So when it failed, it came up to this point. The reason why it came to this point, if I use Fibonacci retracement, it will give me those zones. So I'll show you how Fibonacci works. So use candle engulfing, the nearest support, the candle that closes above that one, then you go all the way up to the wick. Then you can see here, we have, this is a reversal zone. So I marked it as a reversal zone. So you can take this one, it's a reversal zone. And then another reversal zone, it's at this point. So another reversal zone, it's at this point right here. So this reversal zone, it failed. This is where we hit our stop loss last week. So this one failed, but it came to this one. So this where some people entered buy, and this way I entered buy too. So at this point, you saw the market just started flying. So and on the Saturday we had this entry right here. I gave you this entry for buy. So the reason why I gave you this entry, we have a SNL C1 setup. This is a resistance. We have a support. This is a resistance. This is a support. It's like a breakout and a retest. Then again, last week on Friday, the reason why I was waiting for the market to come up to this point. I was waiting for the market to come to this point. I was waiting for it to come to this point right here. I was really waiting for it to make divergence in H1. So it tried to move down, but it not. So what it did, it made a breakout structure right here. So it broke this structure. So if we go to 15-minute, it will be clear. So you can see it broke this structure, and then it formed SNLC1 setup. So this is SNLC1 setup. So when it did this, then it break out, then again it retested. So this way I told you enter instant buy. So that's why it flew up. Again, I'm just waiting. On Monday, we are going to have this one. This is what I'm waiting. Or next week, not on Monday, but this week, this is what I'm waiting. So I'm waiting on this one right here. I'm just marking it. So if the market has to reverse, maybe it will reverse up to this point. Which tool do you use for your trading on daily? My viewer does not look like yours. Yeah, it's because I had some settings on Fibonacci. I'll show you. I'll explain to you now. You can set yours. So I have my settings. So this one right here, it's going to. I'm expecting it. Maybe it will retrace up to this point. More so if it forms candle engulfing again. So if it's going to in 30-minute time frame, no. So I'll just wait for candle engulfing. If it forms candle engulfing, then I'll enter sell, then I'll wait up to this point. But the best thing, since it's an uptrend, I'll just wait for it to retrace up to this point, then I'll enter my buy. So let's just wait, and maybe 15-minute time frame. Let's just wait for it to just retrace. And the moment it retraces, this is where we are going to wait for it at this zone. At this one right here. That's where we are going to wait for it. Maybe it will come up to that zone. But again, it's not guaranteed for it to come to this zone. Yeah. So if you have any question, you can ask. So on this week, that's what I'm expecting with gold. So it might come up to this zone before it will continue going up. So again, on daily time frame, it's trying to form if this kind of forms candle engulfing, you can see here on daily. Let me clear all this one. On daily, if this candle, you have candle engulfing. You have this candle engulfing. we can try to see if we have a breakout network. So it's not there. So it's not that if we had a breakout EMA 50 forms forms a good breakout, that one I could have just said, oh, this one will continue just fly. So if I'm going to use only that one, so we had a breakout EMA 50, that's what I could have used. So, but since I don't have that one, I'll not make any assumption regarding EMA 50 and candle gap. So let's just wait and see what's going to happen on next week. But again, don't complicate it, just make it simple. Use divergence. If divergence, you are not seeing on how to combine divergence with trend direction or that, you can use candle gulf breakout. That's easy. So again, it's not 100% that you are going to make profit in all trades. Some trades you are going to lose them, but again, at least it will give it will put you on a price that you not lose most trades. At least you'll be at the end of the day you'll be in profit if you risk if you do you risk your when you are risking you don't just put all your capital there, you expose all your money to the market. You know on how to do risk management. So at the end of the day you'll be in profit. Again, don't change the market. If it does not give you the signal you're looking for, just leave it. Wait until you get a setup, which has a confluence. Like if it's divergence, wait until you have SNLC2 or SNLC1. That's it. So if you combine those two, that's okay. But if you don't have that one, just if you are going to enter based on just you just got divergence only, you don't have that confluence, you will you might enter that trade, but know that it's a high risk trade. So you don't expose your money to high risk trade. If you are going to expose it, then just know now where to put your stop loss for you not to lose all your money. So sometimes it will work and it will move well. So just know how to trade using divergence. So my main strategy is all about divergence actually. These other ones are my conferences. So be using divergence. If you understand how to use divergence, that's the easiest way. Like this one right here, these are divergence actually. You can see it's a clear divergence. And then here we have SNRC2, SNRC1. Actually, this is SNRC2. Here we have SNRC2. You see that. So then you enter right here, then you see what happened in the market. Just as simple as that. Just try to keep it simple. It will be easy. Divergence is the easiest, way to trade. Because the market, divergence helps you. Again, we have divergence for reversal, which is normal divergence, and then we have hidden divergence. So the normal divergence, or we can call it classic divergence. This one, it's when you see like, let me show you. So like this one right here, you see the market is making lower, and this one's making lower high. So these are classic divergence. So you see this one, the market's making low, and then this one's making lower high. This one is for reversals. So I don't usually use classic divergence in my trading because I usually try to follow the trend. So I use hidden divergence. I combine it with SNRC. Do you use VWAP? No. Do you have notes on divergence? I'll share them on the group. Do you use VWAP? No. So guys, that's what I can share for today. I think you have understood. At least you have got something on how to start trading. See, kind of engulfing and EMA 50, or now you can just trade using divergence. But again, we have what we call SNRC1 and SNRC2. Those are the confluences I usually use in my divergence. Once I have them, and that one I know it's a good trade. I'll show you guys on how to set Fibonacci retracement. So don't worry about that. So that's how you trade, just as simple as that. Again, first, before you start using divergence, know the market direction. So it's is it an uptrend or a downtrend? Once you understand it's an uptrend, then it's easier. You'll be able, like this one, I know this is an uptrend. So I can easily get a divergence in this point, these areas, but you have to go to a lower time frame. Like if it's H4, let me go to H1. So here at this point right here, you can see this point and then this point. These are divergence, this is hidden divergence. Then you enter your buy, then it flies. Again, you can see this one right here and then this one right here. So this hidden divergence. So you can just enter your pi here, then usually when you enter your pi, just put 20 to 30 pips below, 15 pips, it depends. So just do that and it will work out. Again, you can see on in these zones, like this zone right here, you extend it to this side. This one I will take it as a high risk though. Because I don't have SNLC2 setup, but this one is a strong one because I have SNLC1 setup. Actually, SNLC2 setup, so this one is okay with me. So this one, it's a weak one, but still, it's a good trade. You can take this one when you put your stop loss few pips below. So you must have a confidence. So this one, I just found this one being stronger than this one. So this one is stronger than this one. Yeah, guys, that's what I can share. If you have any question before I close this one. Okay, guys, you can have a nice share the recording. Can you download and use that on that? You use that Octa. It depends. So you can use it. You can use it anywhere. Yeah, I'm going to share the recording. It's okay. No problem with that. I'm going to share the. But that's how you do. It's simple as that. Easy. So you can see on Monday. Tomorrow now we are going to trade on gold. I just told you we just monitor this point right here. So if it has to break that zone, then this one is a fresh demand, remember, so it can come up to that zone. So we just, do you use VWAP? No, I don't use VWAP. Thanks, man, learned something. It's okay. So have a nice one, guys. I really appreciate it. Yeah, so guys, that's all. That's all for today. So guys, that's all for today. You can have a nice one.